Alright, so I took a trade on Friday, realized I have not yet done a trade input journal review for my YouTube because I want to go through my feelings in this trading session. Friday was very challenging for me, especially coming out from Thursday. Thursday affected me a little bit because it told me that I didn't follow my full trade plan. I didn't have all the full validities in order for me to actually enter the market to then take that trade, which actually resulted in a negative 46 ticks. It's low risk, I know, it's not the end of the world, and it's very easy for us to come back from, which we already have on Friday. But the thing that I want to reiterate is you have to follow your plan. You have to follow your plan. Because if I look at the data, which I'll show you in a minute, everything tells me that if I follow my plan, I come out with either a break even or a win. If I don't follow my plan, it's guaranteed a loss. It's the statistics is there. It shows me that I have to follow the system. If I don't follow the system, it doesn't work. So let's go into my Friday's trading position. So we took two trade positions because the first one I got actually a really good entry, pretty decent entry. It was still late, but a decent entry. However, my terminal didn't have the one-click trading function on, so I had to go through different menus and it will say, oh, continue, confirm order, and then you have to confirm the order again for your OCO, which is determining your stop loss and take profit levels as well. So there was a lot of menus I had to go through, and even when I clicked the one-click trading, my trade platform refreshed and it disabled it again. So I had to go through the entire process again. I had a late exit, which turned out to be break even, and it really just was a huge mess. So the entry that we got was definitely not as optimal as I would have liked it, which we will now go over. So let's go to the charts first, and I'll go over the data in a minute. This is the trade outcome that we took on Friday. Now, as you can see, another big key factor when I go over statistics is none of my trades in this entire month of trading this challenge has hit a full take profit. And it's something that we're still going to have to work on, and understanding where we should put TP placements and how we can get good quality positions whilst also meeting your validations, whilst also getting the requirements, whilst also getting a 1 to 2 risk to reward. Because my plan when I'm trying these challenges, this is my first challenge account that I'm actually trying on. Wait, that sounds really bad. This is the first challenge account that I have bought myself, and I'm trying it out. I'm risking 1% for 2%. It's a 1 to 2 risk to reward ratio. I risk 1%, I make 2% on a winning trade, I lose 1% on a loss, and I have a break even. But understanding where to place stop loss is definitely a big thing, right? We've come from live trading and it worked, but we've also changed the strategy and changed the system, so that also means I'm still a work in progress with that level, with placing it more consistently. We've had TPs get hit before, however, it's not as consistent as I would like it, so we have to adapt. That's what you do. Anyway, in this trade position, we came out based off of your 30 time frame giving you a candle closure above, and this candle closure above means, for me, the probability of price action needing to come down and break the lows is quite low. You couple that with the hour time frame. The hour time frame, yes, you would like price to re-break the lows for price action to come down, because you'd have a top wick, price action starts coming down. That proves to me that price action will no longer have to come down if you re-break the lows and then come back up to re-break the highs. You're validated in the trade. However, the 30 time frame gave you narrative that you didn't necessarily need that. 4-hour time frame at the time is extremely bullish, and you came off an amazing level. I was really annoyed at myself in Friday's trading session that I didn't take the trade position here on the re-break of the highs. I was at the gym and I couldn't execute on the phone because my GUI trades platform, it works really funny. When you want to execute a trade position, it doesn't show you the charts, so you don't know where your levels are. That's what really pissed me off. So I don't trade unless I'm on my computer at my desk on this trade account. And honestly, if I miss the opportunity, I miss the opportunity. It just got to my head a little bit. It is not the end of the world. So you had the 30, you had the 4, you know that the momentum to drive you up is going to be much, much greater if you do end up re-breaking or retesting highs. So we understood that this typically means price action is only going to require a small bottom wick. You had the 15-minute time frame that also gave you that narrative. The 15 could potentially have played out as a 1-2-3. A 1-2-3, if I just draw this to reiterate, is like this, where you have the next 15 candle push you up and print you up at 49.06. So that's what we were intending price to do, which it actually did. And more so, we have to go over the take profit placement again. But for me, we got a late entry because it was the 15 break of the highs was my original thought, but then again, we were hesitating, and also the one-click trade function cost us some time, so we only got in here. We wanted to get in on the rebreak of the high of the 5, which was a 30 tick difference. So that drastically changes your risk to reward ratio and the amount you're risking with 30 ticks. We still got into the trade position, which I am grateful for. Price action did peak us, and we kind of micromanaged this position, to be brutally honest with you, because when I entered the trade position and realized how late my entry was, I realized my advantage point is no longer going to be as effective as if I had the optimal entry. So the trade plan I had to dynamically manage. I had to understand, okay, well, I'm 30 ticks away from my original entry, and my break-even level was this next high at 48.83. So when price came up, I was like, oh my gosh, I have to go break even. So you move risk up, price action peaks. As it starts rejecting, I'm taking out my position because I know that my optimum entry point is no longer, the trade idea is no longer the same because you have a different entry point. The advantage is gone, and therefore I just want to take what I can get out of the trade position. We secured 63 ticks on this. Had I got the optimal entry, which we will now explain, the risk to reward and a TP placement, we want the rebreak of the previous candle high. You still have the same lows, that's the rebreak of the 15 low, because when the 15 opened, you rebroke the lows first, and that's perfect. It tells me that price action has minimum met my requirement of breaking lows before entering a trade. You've got the current narrative, you've got liquidity that's been grabbed, you've got the mirror on price action to the left of your screen. Price action has previously tested these areas before, but on the higher time frame it's more prominent. If we can scroll back far enough, there you go. You've got a good mirror on price action here, you've got good retest, you've got liquidity, price action pushes up, retests your range, which is all you want. So when we look at this trade position, you are validated in this trade. The most optimal entry for me would have been that 5 rebreak of the high and the 15 break of the high. You'll typically see a very strong pop. Now think about it this way. You want the retest of the highs, and you're basing it off of the 15 time frame. 15 is where you're determining a really good opportunity. So minimum, if I was looking at that bias again and assuming that you're going to get a probable push up on a 1, 2, 3 pattern, you're minimum going to require a tap towards 49.06. Notice that my risk to reward is now 2.4. You compare that to where my TP was previously. This is if we go back to the entry, can I get it here? Yeah, there we go. 2.37. It's 2.37, retesting the highs. This was very ambitious, I might add, because we were trying to challenge the 4-hour highs, but we actually should be looking at just challenging the 15 highs because it's based off the 15 time frame. Your entire analysis is based off the 15 time frame because the 30, although it can come back and retest its whole wick, the probability of that is a little bit lower, especially if you're getting closures like this. So for me, if you look at 1 to 2 risk to reward ratios, 30 ticks, this is just 30 ticks. You push it down to your optimal entry, you bring down your TP to where it actually should be, you're at still a 1 to 2 risk to reward ratio. And that difference was just 30 ticks. That's how big of a difference it is. Hesitation can cost you a lot of money, and so can inevitably setting up your charts wrong and preparing in the wrong area. I mean, it was a mistake with the one-click trading function, but all in all, this would have been the model trade opportunity that I could have identified a little bit quicker. So regarding TP placements in the future, we'll have to kind of go back, adapt, but understand that most of the time, if you're looking for a really good TP placement, whichever time frame that you are determining your entry on, which is the best, so for example for me is the 15, because the 15 had a rebreak at a high, you already rebroke the lows, that's where your requirements are met. I should be placing my take profit based off of the 15 time frame. So if the 15 time frame body of the candle gives me a retest at 49.06, that is the minimum place that I should put my take profit. And that is about it. That was a really good trade opportunity on Friday. If I had everything in my favor, like in terms of the optimal entry, so on and so forth, and actually understanding my TP placement. But that leads me on to saying, look, if you look at my actual scenarios, we've always had to close out against the trade, get trailed out at a stop loss hit, a trailing stop loss, sorry, or a break-even outcome. And every single scenario, once I've closed these trades or been trailed out, has either been a break even or a stop loss hit. Never have I ever got a full take profit hit. That tells me, my data shows me that I'm not placing my TPs in the right areas for them to actually get triggered. And this will cost me inevitably in the future, because I'll either stay break even or I'll stay as a stop loss trader, as a drawdown trader, where you'll just be taking losses. So this data is very important. This is probably why you should try journaling as well, with some of your trades, or if not all of your trades, especially when you start out. I've been journaling since I started trading, so I'm already 3 years into this, and I've been journaling for 3 years. So I know how to read the data I know how to read the data that I've put into this. I journaled for 3 years, but I've only really looked at my statistics over this year, over the start of this year, and we're only in April, so that's 4 months. So I can journal really well, but reading statistics is a different story, which I'm now trying to get better at. That about does it, really. We took 13 trades, 14 trades. They're great winners, but like I said, I wanted to pass this account in 3 trades with a 1 to 2 risk to reward ratio, because 2 times 3 is 6. That's a 6% profit target hit to pass the evaluation. It's taken me 1 month, which is very long, and I feel like I'm still babying the account, and I'm still not following the proper execution that I say I'm doing. And that is the goal for next week. So that was Friday's trade execution. The video I want you to watch, for sure, especially if you're aspiring to be a trader, or if you're very successful already, it might help you. Or if you just want to see what my experience is like on the week of this trading sessions, go watch my previous video. It's 18 minutes of me just yapping on about my trading psychology, my past, and what my plan is for this current funded account, and what I want to do when I eventually go away. I want to travel abroad. I want to do travel. So how can trading pay for that? And how can I make it a possibility? Right now, I just need the proof, and the proof is in all of the work that you do. So go and watch that. I highly recommend it. If not, don't. It's actually for me to look back on in the future, for me to get mogged on. Not for me to get mogged on, so I can mog on it. There we go. But aside from that, that about wraps up my video for today with the recap. And we will come back on Monday to see what the trading session has to offer. If there's no trades, I'll post it on my X, so I would recommend you go and follow that. It's linked in the description, as well as my YouTube channel. But I'm all starting out on this YouTube thing. I'm not great at it. This is completely raw, no cuts, no edits, and that about does it for the day.